IIFL Finance is the other stock that we're looking at. The company says they will address the regulatory concerns. The board is forming a team to implement corrective action as well. Kapish Jain, the president and group CFO of IIFL Finance, is with us to talk about that. Mr. Jain, good morning and thanks a lot for joining in. As you would understand, shareholders as well have some concerns. So if you could tell us what were the issues that were highlighted by the RBI, and by when are you confident of getting the RBI's permission when it comes to gold financing?
So the RBI order came on 4th of March, and the issue that got highlighted were some of them were market practices, but then they were not in line with the regulations. One of them prominently was disbursements in cash of beyond 20,000 rupees. The second was auction not happening at a branch level, but they were happening at a district level. Now, disbursement at branches, disbursement beyond 20,000 in cash was something that was prominently there across all players. And then we were also aligned to what others were doing too, because the customer was demanding that. The auction not happening at a district level, but not happening at a branch at district level was because you really get a real meaty market when you go to a district level. At a branch, you may not find customers and the auctions can fail. To get a better value, you go at district level. But fairly, the regulations suggest that you need to first start at the branch level. So these were two very prominent ones. There were a few aligned to this as well. But we have addressed them all, and we have addressed them all both in spirit and also in writing. So the auction anyway is happening on a daily basis, and the auction is being aligned to the new process. Disbursements, we have made our systems ready to make sure that we don't disburse in cash beyond 20,000 annually. So from our side, generally we have addressed all that we could from an RBI observation perspective. RBI very timely and proactively appointed the special auditor on 23rd of April, and they have concluded their on-ground inspection as well, and they are, I would believe that they would have submitted their reports to RBI, and RBI might be in the process of reviewing those submissions which has gone in. They were all largely aligned to the gold business, and given that we have addressed them in the right manner, we don't see any much hurdle coming in. It will be very difficult to anticipate when this embargo will go away, but from my side and from our side, we are fairly ready.
But in terms of the timeline, any kind of timeline that you've got from the RBI and when you all can go ahead? And I'm sure there's a lot of damage as well, I mean, as far as customers are concerned, right? Because there would have been loss of customer trust, etc. Do you think it'll be a challenge to get that back on track?
No. So yes, in the short term, we have lost business. We have lost customers because we couldn't roll over the assets when they have come for a rollover. These are good quality customers. Our rollover and our stickiness with customers is around 70% from a repeat customer perspective. But given the vintage of the relationship that we hold with those customers and our customer-centric approach that we have with our customers, we very strongly believe that everything else is in place. Our people, our branches, and the sooner this goes away, we should be able to get back and recoup our customers. Because it's not a loss of confidence, it's because of the situation where we are not able to service these customers.
Now, Kapish, hi. Surabhi here. Some more questions on your gold loan business. It is the largest business, right? I'm looking at the breakup of the book. At the end of the fourth quarter, gold loans were 8,264 crores. I mean, it's really towering over all your other segments. And that's where the hit has come. Just talk us through what happened on asset quality, because there was very sharp deterioration, specifically on the gold loan side. And then, there was some deterioration in some other segments as well. Your gold loan NPA, gross NPA, if I'm looking at the right numbers, has reached 3.8%. The book also fell quarter on quarter. The gold loan book, obviously, because of these reasons, it was down 5.5%. So give us an outlook on both asset quality. What is the repair roadmap? And then what's the roadmap on, getting the book back on the growth path?
Yeah. So on the asset quality side, one is the denominator impact. If you notice, there's a 5% drop between the AUM that I had on as of 21st of December, and that's what I hold today. But the second reason is that the customers, when they've come for a rollover, I'm not able to do the rollover in these customers, so I need to find an exit for these customers, either through he himself paying off his outstanding, or I get a balance transfer done for the customer. This element has made some delays and caused some impact on the asset quality side. There's no worry here because these are gold assets. They are fairly well protected from the underlying security. The LTVs are in the 65-70% range, and gold prices anyway has moved up over this period. So all these have helped in making sure that there shouldn't be any impact on the P&L from a recovery perspective, but from a momentary perspective, there is asset quality blip which is coming. The regulations require you to provide adequately when you have a stage 3 asset coming in the NPA bucket. So we have made provision.
No, sure. Sure, but Kapish, hang on, just to complete the asset quality bit, and then maybe you could give us a guidance on when does when does normalcy return to the gold business? So before that, just to complete the asset quality point, it's gold loans is one aspect. The other segment was construction and real estate. I know that's not very big for you, but still, the deterioration is massive. I mean, 0.4% going to 3%. So I'm not sure if there's a numerator denominator thing there as well. Just guide us on total asset quality because, at a complete aggregate book level, your gross NPA is now at 2.32% at the end of Q4. Where will it be by the end of FY25?
So as stated, guidance on NPAs have been 2% or under 2%. And we've been maintaining that irrespective of whatever comes in, whether it's COVID or otherwise. Yes, even in the CRE book that you saw with regard to high-rise in NPA, it's again a denominator impact. The book has almost gone to half. We have shrunk it. Our stated objective has also been that we're going to degrow that. The YOY degrowth is around 30% there. So one is a denominator impact. Second is that some of the this asset which is moved into in the stage 3 bucket, and that caused that NPA going up from a denominator impact perspective as well. We don't see, given that this book is shrinking and going down, the impact of this book on the overall P&L and balance sheet will only go down. And whatever has come as a blip from an NPA perspective, we should be able to resolve it. We don't see.
Back to 2% GNPA, Kapish. So go back to the question. FY25, will your NPAs, full year NPAs by March 31st March FY25, will they be under 2%?
They should be under 2%. The only joker in the pack is when does the embargo goes away and when I'm going to come back to from a resumption perspective. However, since the impact is on the gold business and that asset doesn't really give you too much of a P&L impact, we should be able to go under 2% by FY25.
All right. Hi, Kapish. Welcome to the show. The street is listening to what you have to say, and they're clearly looking ahead because the stock is now up 7.5%. Give us a couple of details, Kapish. As you said, the gold book, degrew by 5% in the past quarter. For quarter one, what should we work with? A 15 to 20% degrowth?
Very difficult, actually. So I see, if you see, it did by 5% with a 1 month impact.
Yes.
We don't give any forward guidance, and this number is not there in the market. But of course, there will be a dip. Whether you take the same permutation of what happened from 1 month impact and apply it for the next quarter, that could be a best guess. But otherwise, there's no such guidance that we give. But till the time that the embargo doesn't go away, and we almost on the verge of quarter one getting closed, there would be a significant dip, like what our MD also highlighted in his release.
Okay, all right. It'll be a difficult one, but I just thought I was trying to extrapolate the number because there could have been growth in Jan and Feb and then a degrowth. So, but it's going to be difficult. There's going to be a degrowth. We'll take that for now. You also raised money via rights issue. Could you tell us why and what's the utilization of this?
So the rights issue money was raised first a confidence equity and confirmation of confidence in the firm by the largest investor. One is the two promoters, Nirmal and Venkat. They participated fully on the rights issue, and the largest investor of Apex as well participated. So it's more of a confidence security to suggest that yes, there was this embargo which came in for some of the operational lapses that came into the company. Otherwise, fundamentally sound, everything is operating fine. We have a very good business model. We have delivered on a consistency basis, and we should be able to deliver going forward as well. The rights issue money also helps us to address some of the queries that can come in from bankers, from lenders, from rating agencies, because a healthy capital position in an NBFC does answer a lot of these anxieties that can come in. The capital is here for the company to grow. Sooner the embargo goes away, we should go to the new normal and be able to push up paddles for our growth in a very controlled manner for sure. But the opportunity exists and we have the expansion for us to just go and use the capital.
Okay, got it. We'll wait to hear from you once that happens as well. But stress has started to emerge for other lenders in the MFI segment. I wanted your thoughts on that because your disbursals in MFI also declined quarter on quarter despite Q4 being a seasonally strong quarter for the MFI space. What's happening there, and do you think it could get worse before it gets better?
So there are two elements to your question. One is asset quality, other is growth, right? So asset quality has held well. We don't see any concern on the asset quality because we have certain risk management practices to make sure that we don't over-leverage to a particular geography. And that way, being a pan-India present company, we are able to expand assets while to address any kind of a challenge that come in from a particular geography or a market. From a growth perspective, we had grown at fairly decent pace last few years. And the objective is to make sure that we control ourselves there before any kind of a surprise comes in, because it was a very heated market because of the embargo of lending rate, which was earlier limited to 10% of the borrowing, no more being there. It became a more risk-adjusted pricing and people were gung-ho and going for growth. We want to just revisit the entire environment and go a little muted and slow. And therefore, this degrowth came in Q4. Going forward also, we believe that we're going to just make it a little more normalized with a growth horizon of maybe around 25 or 30%, and then take it from there.
So 25 to 30% is the growth rate that you're looking at in the MFI space, is it?
Around that range.
In which year? In FY25.
Fiscal 25.
Okay.
Okay, and all right. So,
okay. On asset. Yeah, I just had a follow up on asset quality. Because overall your asset quality has worsened if you look at it quarter on quarter. So going ahead, just particularly for MFI, I know you gave us the overall number, but for the MFI space,
MFI asset quality has stood where it was last quarter as well. There's not too much of a movement there. And since the objective is to make sure that we grow controlled manner and keep all our other attributes under check, so asset quality will be maintained well, and we're going to make sure that we do that way as we grow in a controlled manner, maybe around 20-25%. On the overall asset quality, the big two movers, as I mentioned, was in the gold and the CRE book. Gold doesn't give you a credit loss; it's just a momentary thing, and that should get corrected. CRE is a more depleted book, half to what it was, almost like 1/3 what it was 4 years back. So that's also going to not have too much of an impact from an overall P&L perspective.
okay, all right, Kapish, thanks for joining in and answering all of our questions. We hope to chat again and figure out, how the review with the RBI goes and when the gold loan business gets back to its original ways.